Hello everyone, welcome once again to this Principles of Accounting video series, and we are now on topic 2, which is on the recording process. And again, this is intended to those who are taking basic accounting courses or to those who just would like to learn about basic principles of accounting. So that you can follow, I have posted the links of the topics in the description below. So we have to recall the accounting process. We have identification, recording, and communicating. So again, in identification, you have to select those economic events or transactions that are relevant to the business. Like you paid for the salaries of your employees, you received cash from the service that you have rendered, and etc. And the recording process is actually where you record, classify, and summarize those transactions. And communicating means preparing accounting reports and analyzing and interpreting these results for the users. So on this topic, we will be dealing on this second accounting process, which is the recording, wherein we will be recording, classifying, and summarizing the transactions that we have identified. So here in the recording process, just to give you a quick outline, first we will be talking about the account. What is this account? Steps in the recording process, the recording process illustrated. So we'll have a short example, then the trial balance. So more specifically on the account, this is what we call the T account. So T account because it has two sides, the debits and the credits. And from that basic that we have learned, we are going to expand the basic accounting equation. Then, in the steps of the recording process, we will be discussing about journalizing and posting. What are these two? We will be dealing with that as we go along with this topic. Then, limitations of a trial balance and how we're going to locate the errors in a trial balance. So let's start with the account. The account is an individual accounting record of increase and decrease in a specific asset, or it could be a liability or an owner's equity item. And an account consists of three parts. So we have the title of the account, can be cash, accounts receivable, accounts payable, or other accounts. Then we have on the left side is the debit side, and on the right side is the credit side. So it is referred to as the T account because if you look at its form, it actually looks like a letter T, wherein all of those parts that I have mentioned, the title, the left side, and the right side, are located in that T account. Now let's come to these two important terms, the debits and the credits. We have already learned how to analyze transactions, right? Now, in this recording process, we have to apply those that we have previously learned on as to what are we going to do with the increase or decrease of those accounts. And that refers to, are we going to debit or are we going to credit? It just simply means left and right. Okay, so this is an accounting rule that applies to all accounts. Sometimes it is abbreviated as DR for debit and CR for credit. So the process is what we call debiting and crediting. So we have a debit balance if our debit amount exceeds the credits. So meaning the left side is greater than the right side. Well, we have a credit balance if our credit amount exceeds the debits. So if our right side is greater than the left side. So we are talking about the sum of all those amounts that are entered into the debit and the credit sides. And I will show you how to understand that later on. So let's look at this tabular summary being compared to an account form. Before, when we learned how to analyze transaction, let's say for example for cash, you already know the increase and the decrease of cash, right? So you record that as positive and negative. But if you look at that in a T account form, you have that title cash and all the increase in cash is recorded in debit and all the decrease in cash is recorded in credit. How we can apply now the increase and decrease that we have learned in our transaction analysis. And comparing the balance, since the debit side has a greater value, then we say that cash has a debit balance of 8,050. So the debit and credit procedure is one of the crucial things in accounting. And this is what we call the double entry bookkeeping, wherein the dual effect of each transaction is being recorded. So meaning the two-sided effect. If one side increase, then the other side is also affected. It provides a logical methods for recording transactions. And the sum of all the debits to the accounts must equal to the sum of all the credits. So let's look at the effect of this debit and credit to assets and liabilities. Again, we already have learned, right, about increase and decrease. Now let's apply that here in debit and credit. For assets and liabilities, debits are recorded if there are increase in assets and if there are decrease in liabilities, while credits are on the other hand. So let's look at their T account. So for all assets, on the left side, it could be cash, accounts receivable, equipment, land. So take note that all assets increase on the debit side, and that is its normal balance. While for all liabilities, you have on the right side could be accounts payable, unearned revenue, notes payable. So all the increase in your liability is recorded in the credit side, and that is the normal balance. Now let's proceed to capital and drawings. So all the debits are recorded if there are decrease in capital and increase in drawings. And on the other hand, you record that to credits. Let's look at their normal balances. So in a T account, for any capital account, so one hint here is that capital starts with letter C. So increase in capital is recorded in credit. That starts with letter C. Another hint is that for drawings, drawing starts with letter D. So all the increase in drawings are recorded in debit, which starts with letter D. And remember their normal balances. Now let's come to the effects to revenues and expenses. So all the debits are recorded if there are decrease in revenues and increase in expenses. And on the other hand, credits if there are increase in revenues and decrease in expenses. So looking that into a T account, so all your revenue accounts, you have service revenue, rent revenue, that increase is recorded in your credit side. While expenses account, you have your salaries expense, wages expense are recorded in debit side. So let me give you this helpful hint once again that what we should always remember here is the normal balance. So hint is that the normal balance for an account is always the same as the increase side. And that is what you are going to remember. So you can write that in your notes or in a separate paper and post it into your wall. So on the next video, I will give you some examples on how to analyze transactions using this debit and credit procedure.